You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from Cboe. The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time once again to light up the world of options with your favorite bi-weekly source for all things options related. Yes, it is time once again for the Thursday edition of the Option Block, what the cool kids call the old OB. My name, of course, Mark Longo from theoptionsinsider.com. Reminding you a lot of stuff coming at you on the feed these days, including yesterday. Our pro members got an early glimpse, an early listen of the European market brief. We went hunting for dividends across the pond. That was pretty cool, as well as, of course, the Hot Options Report. 2 new editions hitting you on the feed these days. Make sure wherever you're listening to the Option Block, you're getting the full kit and caboodle. Otherwise, you're missing out. And if you don't want to miss out, of course, you want to get those early glimpses. You want to get early tastes. Brian put up some cool, actionable GLD butterflies on OPR. Our pro members got all that first as well. TheOptionsInsider.com/pro is the place to go to get all of that fun. And speaking of fun, let's see who's joining us for a little bit of fun on the old show today. First, out to the hallowed halls of Cboe East, where we are joined once again by the Flowmaster, Mr. Henry Schwartz from Cboe. Mr. Flowmaster, welcome back to the show, sir.
Howdy, Mark. Happy to be here. I was actually at Cboe HQ yesterday in Chicago, but came back to New York last night, and it's a beautiful day here. Man, markets were busy yesterday, and they're busy again today. So it's definitely it's a pretty interesting month, and we're only halfway through it. So
I thought I sensed someone walking by the studio building yesterday giving us double middle fingers. I couldn't figure out who it would be. Now I know. So there we go.
I want to know, when are they going to stop the construction outside your studio building, Mark?
It took us offline for a good chunk of the day yesterday. Mid shows, they just knocked us offline. So that was fun. You think upgrading to Google Fiber would be a good thing, and yet it has been naught but perilous. And speaking of perilous, the land known as St. Charles just wrought with peril. But nonetheless, Uncle Mike braves it for us to come here on the show. Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to the show, sir.
Hey, we like to refer to this as the land of milk and honey. But nonetheless, always happy to be on the option block because I don't have to leave St. Charles to be on it.
Milk, honey, and peril as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we tell you what the heck we're trading. And sometimes, listeners, I just crack myself up. Good to have an audience of one out there at the end of the day. You know, are these markets in peril right now post-Fed? You know, if you just tuned in immediately post-Fed, you'd be forgiven for thinking, yeah, we are in some serious peril. We saw some whipsaw action, S&P selling off nigh on 1%, maybe a little more than that at its nadir there, but an aggressive sell the fact type of sell-off. Then, of course, Uncle Mike and his cabal got together, started buying it, and we ended the day pretty close to flat to slightly up in most of the major indices out there. So a bit of a head fake out there. And today, kind of roaring out of the gate, which is kind of interesting because we are very much, once again, back in that bad news is good news kind of thing. Yeah, we're cutting rates, but we're cutting rates because the economy sucks and the Fed's outlook wasn't exactly raucous. And so it's very much a getting the rates cuts that the market has been pricing in for a couple of years now. But is that a sign of good things to come? I don't know. I think you could probably take both sides of that. The Uncle Mike bulls will say, yeah, give us all the cuts, because the Fed is here to bolster the stock market and not else. But there are other camps out there that are maybe a little bit, shall we say, skittish about what they're seeing out there. But the markets aren't skittish today. S&P up nearly 2/3% right now, so well back north of the 6,600 level. The Dow up about 1/3%, and NASDAQ up a little over about 1.1% out there. So if you're looking at this, you would think all is right in the world out there in terms of the markets. We are just rally ho mode yet again, a mode, to be fair, that we have been in for some time. VIX cash, not really doing a heck of a lot, not really coming crashing back to earth. It had an interesting day yesterday as well. If you were playing that, you know, aggressive VIX fade or that aggressive VIX pop move yesterday, you didn't really get a ton of it. So it's been kind of an interesting one. Of course, we also had VIX options for September going out effectively the day before. So that took a lot of the oomph out of the move for a lot of folks yesterday there as well. If you were trading September VIX looking to capture some Fed movement, you had an unwelcome surprise. Yes, even though we've been telling you that on vol views for some time out there. So VIX cash coming in and start the show right around 1565, which puts it pretty much exactly unchanged from where it was on the Monday show. So all that Sturm und Drang around the Fed signifying nothing right now. VVIX 94 coming back down to earth a little bit, down about 3 points out there. We will keep an eye on this throughout the show as we go around the horn. Let's start with the Flowmaster, who was hanging out right down the street here yesterday in Chi-Town. I think he's the one who tripped over the Google fiber cable and took out all of our broadcasts yesterday. Mr. Flowmaster, let's start with yesterday because it was a bit of a wild day. What were your thoughts on what the Fed had to say and the market's reaction kind of in both directions yesterday? And then what's catching your eye out there today, sir?
Well, yeah, I mean, it was highly anticipated, right? We've all been kind of waiting for this, and you know, the economic data has certainly pushed towards a cut, and there was, you know, whether it was going to be 25 or 50 bips or anything else, you know, any other sort of fireworks. You know, it was one of those days, especially, you know, we look at the 0DTE straddle, and ahead of a Fed announcement, it's got this funny like behavior where it really doesn't move, it really doesn't decay, and I think it was pricing in around $35 yesterday, and the market really was just kind of, you know, not doing a much until we got the quarter point cut. And then it was pretty interesting. I was in the office, not on the floor. I should have headed over to the floor to kind of see the fireworks, but it was shot up and then we basically sold off pretty hard. I think from top to bottom, there was maybe about 70 handles in the S&P, which is pretty good, pretty big move, especially considering our realized vol has been pretty meager. You know, we're kind of back towards the single digits, which means basically we're having moves, you know, well below 1% a day. So to see a swing of, you know, over 1% was something. And then, you know, it really did just kind of like fizzle right back to flat on the day. So it really is. It's one of those interesting. Everybody's waiting for it. I think some people were positioned for the market to pop on the number. I think that we were in a period where bad news was good, right? Because the worse things were, then the bigger the cut was going to be. I think maybe now that things are finally underway, we're back to kind of a little bit more of a, it's not going to be as clear which way we're going to go on different numbers. So, it was pretty good. Volume was pretty solid. I think we traded over 70 million contracts yesterday. So that goes down in the top 10 of all time. But I'm sure we'll have even higher records come through the rest of the year, because that's just how things are going. And you look at where we are, and the S&P's up 13% year to date. Russell's up 10%, and I tell you that Russell's up almost 16% just in the last couple of months. So the Russell and small caps benefit from lower rates, and that seems to be kind of what's playing out. And Russell's outperforming SPX today as well. So it does seem like that's kind of how things are looking. And then we also have some pretty interesting news on the NVIDIA Intel side. I'm sure we will talk about, and it's just a very, very dynamic, very active market.
Very dynamic indeed. Speaking of dynamic, I heard you were slinging some dynamic zero DTEs, maybe in the back of a panel yesterday. What were you up to, Mr. Flowmaster?
No, I did not trade from the audience like the guys did at the Robinhood event, but I did actually jump into a few zero DTE calls yesterday after we had that sell-off. So after market ran up and then ran back down, I just kind of, the thing about zero DTE SPX is there's a lot of inherent leverage in these options, right? They only have a couple hours to go, and you have to keep that in mind. But basically, if you divide the option delta, the option price by the delta, basically in notional terms, you can basically see how much your $15 call controls in terms of notional, and it's hundreds of times leverage, which occasionally is appealing, especially when you get a whip around like yesterday. And playing it from the long side, you do have cap downside. You have that kind of the convex upside payoff, which is one of the big draws for options. And so I did okay on that trade. Could have gone the other way, but I like to be involved so that I can have something to talk about today.
Mr. Flowmaster said, I've seen this movie before once or twice, and he put a call into Uncle Mike's cabal. He said, start buying it right now. And then he bought his 0 day, and everyone had a smile on their face at the end of the day. But Uncle Mike's not smiling because he is in a land fraught with peril. I'm going to keep hitting on that all show. It just resonates to me today, Uncle Mike. Mr. Uncle Mike, thanks for braving the peril to come on the show. And what were your thoughts yesterday as we kind of got that immediate sell-off in the market, and then the bit of the rally that the Flowmaster was trading yesterday? And then what's catching your eye in a mostly green day today, sir?
Well, what's catching my eye is that in the history of St. Charles, there has never been a riot. There's never been such peril as what has happened in the cities of Chicago and New York. So I would say that in the entire history of all of St. Charles, there's never been peril. Also, with the entire history of the stock market, there's never been a better time to sell than today. We do have new all-time highs in the stock market. 46 points up on the S&P today. We were up at 66.56 earlier today. We're at 66.47 as I make my exciting announcement about the lack of peril in St. Charles, as well as the markets themselves. So that's where we are. We have in the sectors, technology is up almost 2% on the day. So that is one of the main drivers of this rally on the day today. Just some stocks that are catching my eye on this marketplace today. Meta, aka Facebook, is up over 1% on the day. Nvidia and Palantir, of course, those guys just go up a ton every day, it seems like. Nvidia is up 3.7% on the day, up over 6 handles. Palantir up 8 handles on the day, up just under 5%. Tesla is still holding the 420 level, although they are down $2 on the day. So we do have not a perfect market in terms of things being higher, but we do have some movement. One of the things that's really catching my eye today is the fact that after the announcement from yesterday, bonds I wouldn't say they're selling off, but we do have bonds going to the downside, if you will, with the 10-year as well as the 30-year. So we are getting some sell the news action in the bond market as well as corporates. So most of what was happening yesterday appears to have been factored in, at least on the bond side of things. And so now we're in the real market, if you will, meaning that now that the Fed has said their piece, what's going to happen now? How are we going to react in the future? We don't have a Fed announcement coming up in the next few days to look forward to, for better or for worse. So now, what are traders thinking for the markets ahead? We did make some 13-year highs in silver yesterday. However, we have come down off of those. Just looking at XLV, we did cross the 39 mark, but we did come back down. We're up 0.4% on the day-to-day with SLV, but nothing major along those lines. So the markets may have factored in where they're going to go, what they're going to do based upon yesterday. And so now we'll see where we're really at. That is what I'm seeing for now, Mr. Mark. And I'm also still not seeing any riots, nor am I seeing any peril in St. Charles.
We shall see. I've been out to those fairgrounds. Kind of perilous. You might slip on a cow patty. You never know. You never know what's going on in the lands of St. Charles. Maybe they give you the wrong tzatziki sauce or no sauce on your gyro at Skippy's. That's pretty much
that would never happen.
The definition of
people
peril.
Appreciate proper sauce placement on all of our food.
The definition of peril, if I do say so myself. Like I said at the top of the show, it's are these perilous markets? The answer is no, listeners. It's once again green on the screen. If you just saw these markets out of context, you'd say, man, we are off to the races. Another banger day out there on the street. VIX reflecting that as well. VIX looking pretty decently active out of the gate. Not quite as hot as yesterday, but then again, yesterday was Fed day after all, listeners. I'd be surprised if we were hitting those numbers right now. But 543 on the tape, that's pretty decent. Also, the ADV, not messing around, 955,000 contracts. That is the ADV in VIX now. You know, when VIX is within spitting distance of 1 million contracts a day, that things are popping off out there. Not all is right with the world when VIX is averaging nearly 1 million contracts a day. Someone is looking for the other shoe to drop, or worried about it, or hedging against it, or speculating on it, or maybe all of the above. But usually when things are quiet and all is hunky-dory with the world, VIX not hitting nearly 1 million contracts a day. We also don't usually have gold sniffing all-time highs, even though maybe the Fed put a kibosh to that. We did discuss that yesterday on the Futures Rundown. If you're a gold bug or a precious metals fan, you might want to tune into that show yesterday. Interesting discussion there. But VIX, like we said, closing in on 550,000 contracts on the tape. The hot option out there today, I bet you can't guess what it is, listeners. If you said 90,000 of the D's 14 puts for 11 cents, you are an eerily prescient person. You have been paying attention to the shows for a while. That is the hot one out there today. Like I said, 90,000. Looks like it's part of a 1x2 of the D's 15.5, 14 put 1x2. We don't see a ton of put 1x2s out there, which is also wonky. On the initial blush, it looks like they're selling one and buying two. So selling one for 41 cents, buying two for 22 cents, obviously total. So if that's the case, man, you are looking for aggressive seasonality to kick in VIX land, especially given the fact that we may not know who the next Fed chairman is around that by that expiration. So I don't know. That's a wild one. I mean, if you had asked me if there are any times of year that kind of spread might work, you know, late summer and December are usually the 2 times a year it should work. So I don't fault it from that perspective. It's just wild to put that much capital down on a, you know, what are you going to get from that? Are we going to see that much annihilation? Anything's possible. But we know historically, this past year at least, we've had a hard time really maintaining south of the 15 handle, let alone 14 and below. So wild stuff if they are indeed selling that, listeners. That is also, at least the D's puts by themselves are also the subject of a flash poll right now, listeners. We asked you quite simply, 80,000 of those D's bad boys, 14 puts, going up for 11 cents. You want to buy them, or do you want to sell them, or you maybe sell them in a spread or buy them in a spread? Right now, 100% of you are like, give me those puts. So, all right. Let's roll those bones. Let's do the rest of the top 5 really quickly. Number 3, 28,000 of the D's 22s. Number 4, 18,000 of the OC 18 puts. Number 5, 17,000 of the October 15 puts. So that's the strike we're used to hearing, the 15 put strike. It's been a while since we talked 14 puts, so kind of wild stuff. Is it wild stuff out there in SPY? Yeah, SPY's banging today. Nearly 6 million contracts on the tape. In fact, let me re-rack it right now. Yes, we did just hit it. 6.04 million contracts on the tape for SPY. So an absolute banger. The ADV 7.8 million. We're probably going to get there certainly today. Maybe not by the end of the show, but we'll definitely get there by today. So a hot day out there in SPY. Post-Fed, feeling the love. The S also feeling the love. 2.9 million contracts on the tape. The ADV just 3.9, so only a million contracts away from hitting that level. Small caps have been rocking of late, mostly because they were going ex-div, driving a lot of div capture play out there. Still looking hot today. 1.4 million contracts already on the tape in small caps, which pretty much is the ADV. 245 calls expiring today, so we're back in 0-day fun. 90,000 of those bad boys. That is the hot option out there right now. That is also pretty much the at-the-money strike, 244.85. Average price for these about a dime, so a straight-up flyer, listeners. There is some OI there that could be closing as well, but interesting stuff. Rolling the bones on small caps, perhaps, as we keep on rolling out to the Qs. Are folks rolling the bones out there, listeners? The answer, yeah, it's a pretty decent day as well. About 3.2 million contracts. That's about fully a million contracts more than we expect this time of day. The ADV about 4.15 million out there. So definitely on pace to hit that unless the Qs pretty much stop trading for the rest of the day. And you know what's not stopping trading anytime soon? It's the single names, listeners. They are looking spicy out of the gate today. So all it took was the Fed to kind of kick these markets in the teeth a little bit. And now we got some volume lighting it up. Amazon, number 10, cost you, get this, 557,000 contracts to break into the top 10 today. That is a lot. For frame of reference, some of our newer listeners, 250 is usually the floor. Below that, it's kind of a nothing burger day. 350 is our threshold for respectability. 450 is a certified banger. I don't know if we've ever had a day where we were at 557 at this portion of the show. I'll have to go look and see. I mean, we were doing shows on the August 5th meltdown, so it could have been one of those type of days, but maybe outside of those aberrant one-off event risk days, that is a hell of a lot of paper to kick things off today, listeners. That gets us to the Amazonians. 557. Some days we're not at that by number 5 or even number 4. That just tells you how dense it is out there today, listeners. Folks are slinging those options. Amazon 233 exactly right now, up about $1.25 or so, about 0.5%. Good for, again, 557,000. That only gets you to number 10 today. That's a banger. Number 9. It's our old friend, formerly known as MicroStrategy. Now it calls itself Strategy. Around here, we just call it the Monster, aka MSTR, listeners. Trading 353.5, up nearly $24 or about 7.25% out there, listeners. Good for the number 9 spot, 583,000 contracts. Number 8, the Fruit Company, 238, down about exactly $1 or nearly 0.5% today for them. Putting up 616 on the tape for number 8. Number 7, Open. You know, it's a hot day when Open's all the way down at number 7, and it's already put up nearly 750,000 contracts. About 710,000 contracts already for Open. Man, this is just a wild day, listeners. 707,000, $10.13 off about a dime or so today. It's already had about a 60-cent range on the day, listeners. So hot stuff out there for Open. Number 7, 707. I wouldn't be surprised to see it climbing ever higher as the day progresses. If you want to hear where it ends up, make sure you're tuning in to the Hot Options Report after the bell. My goodness, number 6, Mara. Wow. We were talking about selling. I did sell, what was it, 15 or 15 half puts earlier this week. I got a fair chunk of change for those. Mara hitting $19 today. I don't think I'm selling 15 puts again anytime soon. One of our pro members, I think, was suggesting selling deep in the money puts because he thought you could buy the stock or get the stock much higher later on this week post-Fed. Looks like he was right, popping $1.70, nearly 10%, trading $19 right now. My goodness, Mara off to the races, 717 on the tape for Mara Holdings. Number 5, it's Palantir. 811 on the tape, rallying $8 or nearly 5%, trading 176.30. Good for number 5, 811,000 contracts. Number 4, back to the A tech names. It's AMD. AMD, not liking this NVIDIA Intel news. Not really good for them. 155.5, off about $3.50 or a little over 2, about 2.25%. Good for 821 on the tape today. They did sell off to shy of 150 earlier this morning, so they have rallied back to north of 155 right now. So interesting stuff for AMD. 821 at number 4. Number 3, yes, all the way down at number 3. It's Tesla. 423.23 off 263 out there today. So if you've been listening to the hot options report, you know there's size OI on the 420 calls. They're giving some back right now. If you listen to that show, people were paying and they were trading for a hefty premium, those 420s, even when the stock was much lower. So you can't close here tomorrow, 423.79. It's going to have to be a fair bit higher. It did get to 432.25 today, so maybe you took advantage of that to unload those 420s if you had some in your back pocket. But we shall see. Either way, number 3, Tesla, 1.93 million. We'll see what the hot option is out there today. A little bit later in the day, number 2, NVIDIA, 2.15 million contracts on the tape for them. 176.60, up about 6 1/3, or about 3 3/4%. You don't normally see the investor or the acquirer rallying off the news, but apparently we are today. Good news out here apparently for NVIDIA, 2.15 million. Why is it good news, listeners? Because they just invested in the name that we are all 10% owners of. So congrats to all of us out there. Intel having a day of days. I'm hard pressed to think of the last time Intel rallied 24, almost 25% in a day. Now, back when I was out there, I saw it sell off about this amount overnight and intraday, but I don't think I've ever seen it rally this hard. It's probably been a while. Probably back to the .com madness days out there. Either way, nearly $31, about $30.90, up $6 or 24%. Just today, if you haven't heard the news, if you've been hanging out under a rock, NVIDIA investing $5 billion. So if you're keeping tabs, we all own 10% of Intel now. SoftBank took a piece of Intel, and now NVIDIA's taken a good chunk of Intel. So everybody owns a piece of Intel right now. When they went down to Washington, hat in hand, they were trading about exactly $20. So this has been good for nearly $11 in their stock. Say what you will about the future prospects. Probably good for those as well, getting all this cash infusion, but just a huge run in the stock. I mean, it was literally exactly $20, about a month ago out there. So just absolutely wild stuff out there. Yeah, actually, it was end of July, August 1st, so a month and a half or so. It was $19.31 going in, about exactly $20. And then they went down to Washington and all this madness started. When's the last time we had Intel topping our list, listeners? It has been quite some time out there, listeners. 2.26 million contracts. Let's just do it really quickly because I know you're curious. I am curious. We will have the ultimate answer a little bit later today on the Hot Options Report. But let's look right now. The hot thing out there, the hot option everyone's loving, you know what? This may not be music to the ears of Intel bulls out there. It's nearly 90,000 of the SEP 30 puts going up for 45 cents. Again, these are expiring tomorrow, listeners. This is a one-day, if you're buying these, this is a one-day roll of the dice. It's like a lot of them traded for a quarter. They had average price of about 45 cents, so trading all over. We did see this with Oracle. There was a ton of fading of that rally. The par puts were lighting it up for days before the stock fell out of bed, and it did break through the par strike, and those puts ended up going out worth a fair amount of change. So it looks like some of these could have been sales, so they could be right in the line in the sand here as well. And 25 to 41 cents, would you be a buyer or a seller? That might be a fun flash poll as well. But either way, wow. Hot stuff out here. And speaking of hot stuff, listeners, it's Thursday. So you know it's hot because it's time for the Flowmaster to go crazy. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get down to business. It's Thursday. Time to unleash the beast known as the Flowmaster and see what's catching his eye out there. First, we're going out, listeners, to a name we haven't talked about in a while. You know, we're all obsessed with tech and AI and all this fun and maybe some crypto sprinkled in there as well. We don't talk about donuts very often. That's where we're going right now. Krispy Kreme, ticker symbol DNUT, D-N-U-T. Trading 357 up 42 cents or 13% just today. Over the past year, though, it's been a bit of a dumpster fire, off nearly $9, 864, or about 71%. It did bottom out in June around $2.50, so glass half full, it has rallied about $1 from its nadir, but it is off about 8 2/3 from its high out there. I know, Mr. Flowmaster, you love eating donuts. Sounds like you've been watching Donut a little bit as well. What's been catching your eye, sir?
I did dive into the donuts yesterday. So there was a funny. So everybody's kind of waiting around for the rate cut numbers at 2:00 New York time, and I was kind of doing the same thing as everybody else. And then, but just right before that, around 1:00 New York time, I started getting hit with a whole bunch of kind of directional opening call buyers in Donut, in DNUT. And I have been in this name in the past. I think I lost some money on it. Certainly was higher, I think. But this was kind of enough of, a few thousand calls getting bought. Stock was around 330, and they were buying the SEP 3.5 and the September 26th 3.5 as well. And so I did jump into the stock, and it ran up about 10% from there. So it got up to like 350-ish for a little while, kind of held out there for about an hour. And then the headlines hit about the FBI director, Kash Patel, disclosing a purchase of Krispy Kreme. And it was kind of bizarre. And stock actually kind of started it to fall back at that point. And I was out of most of it, which was nice because in the end, by the end of the day, it was kind of back a little bit below where it started. But it was definitely a weird one. I mean, on the day, 46,000 calls traded versus just 522 puts. And what is also kind of interesting is I mean, the market is very strong today, especially in the small cap world. But Donut is trading 355 today, so it's up 12%. So it's even higher than it got yesterday. Now I'm not in the stock anymore, but it's a funny one. I mean, the way that we are at all-time highs, as Mike yelled out multiple times. There's a lot of money to go around, basically, and I feel like when the market is just really strong, you do have people that will chase things, and this really kind of feels like one of those. I don't know if it's going to lead to anything, but it was a pretty sweet donut trade.
Yeah, you don't get the FBI director talking up donut stocks very often. I mean, there's a whole other argument to be made about how most government officials probably should be in blind trust, shouldn't be out there just buying stocks willy-nilly, but that's a conversation for another day. But yeah, plug in Krispy Kreme in front of a House committee. This is the world we are all living in now, Mr. Flowmaster. So I hope you're having fun. Sounds like you are on the stock side as well. Speaking of folks having fun, we were just talking about this one, listeners. A lot of folks, if you're riding Intel over the last month and change, you're having a good run. But Mr. Flowmaster, you spotted some interesting swings ahead of this deal, ahead of this big announcement. Almost, dare I say it, almost as if someone potentially knew something. What were you sniffing out, sir?
Well, yeah, every time we see a deal, whether it's a cash takeout or some other kind of unforeseen catalyst, I guess I would say. I like to go back a few days and try to figure out if anything traded ahead that was just either well-timed or suspicious. And, in the end, it's hard to tell the difference. But I did, today's move in Intel is the big one, 24% right now. And when I looked at the largest open interest changes, now there's a big flex RevCon, but we know what that is. That's not a directional trade. That was about 40,000 contracts yesterday. But the biggest listed option open interest change is 11,600 of the September 26th 26 strike calls were net opened yesterday. So then I go and I dig into the trade history, or basically just go look at the individual executions from yesterday. And the biggest piece is a buyer of 7,841 of them for 38 cents. Stock was around $25 yesterday. So, they traded 38 to 40 cents. The Cboe open close data, which kind of confirms whether it's customer buying or customer selling. It's always nice to be certain based on the exchange data itself. Did confirm that it was a net customer buyer of these. It may have been more than one customer. But on the day, 11,000 of these calls opened for around 40 cents, and they're now trading $5.50. So that's a pretty amazing overnight return. I don't know whether somebody knew something or not. My gut feeling is there's probably more shenanigans going on now than there were a couple of years ago. Just because of kind of the environment and, the fact that regulation seems to be a little bit less of a concern. It's an amazing trade, whether they knew something or whether they got lucky. I think it's about a $4.5 million winner on about $400,000 outlay.
You're not rolling the bones on a dime, sir, although a week and change out on a stock that, hasn't kissed that level in forever, just on a whim, and you don't think that's just fortuitous paper, sir?
Maybe they were just lucky. Sometimes people get lucky.
The earth spirits talked to them and told them to buy some intel out there, listeners. Yeah, that's interesting stuff out there. Yeah, not even a dime, 38 cents, listeners. So they were not exactly. Wasn't like it was a nickel flyer, Mr. Flowmaster. They spent 40 cents. So, yeah, that was some commitment to the cause. Speaking of commitment to the cause, let's see what the cause is in this next one. This is, we talked about this one before, but it has been a while. This is out of Singapore. That's right. This is our old pal Grab Holdings, ticker symbol appropriately enough, Grab, Grab, trading 630 right now. Up about 20 cents or a little over about 3.25%. It rallied as high as $6.50 today. So the game is afoot out there today for some reason. I can't see it. So you know what the old answer is. More buyers than sellers, kid. And looks like on the year, it's up about $2, 2 2/3, actually, about 72%. So it's been a good little year here to grab onto Grab. In particular, over the last few weeks, it's rallied from a little bit under $5 to $6.50 this morning. That is the 52-week high. So nice little pop here for Grab. I'm going to go out on a limb and say somebody was rolling the bones on some calls, Mr. Flowmaster. What'd you spot?
Well, yeah, that's exactly it. And I also kind of played in this one, although it looks like this one has really petered out. But even in the first half hour of the day, we started seeing some big call buyers. And I do remember talking about this name before, because when you go look up what it is, it's like this bizarre e-commerce in, Cambodia and places like that, which even kind of surprises me that it's a listed ADR. But this was basically at 9:45, the October 10th 6.5 calls, and also the September 6.5 calls. Those expire tomorrow. They started buying them pretty aggressively. And in fact, on the day, I think we have 183,000 calls trading versus 6,000 puts. Way in advance of way beyond the average daily call volume in the name is 48,000 contracts. So this thing does trade. The stock did shoot up, kind of hung out around 645, 650. Looked like, this is, again, it's kind of a question of like, we know there's a lot of kind of meme behavior going on. We know that people are looking around for it. So when you see, what looks like pretty obvious, aggressive, speculative upside buying that's unusual in size, that's kind of the beginning of the potential, right? It helps if it's a hard to borrow name or something that's, that doesn't trade a lot of stock. But this one was good for, I think I managed to make 8 or 9 cents in the stock. I didn't actually try. I might have traded a call spread as well, but just an interesting one. I think it's going to be like this for the next month or two, unless we get some sort of kind of, because it feels like the macro thing everybody was waiting for, at least in the interest rate side, has passed, right? We got 25 bips. We didn't get 50. It feels like the stage is kind of set for a couple more cuts, and maybe there won't be any big surprises there. I think that gets people kind of comfortable that nothing bad's going to happen, and whether or not that's true. And there's obviously still couple of wars going on, so bad things can happen, but it feels to me like we're kind of in the middle of a pretty frothy period, and I like to kind of take advantage of those situations, and like I said, just like this trade, basically just kind of getting in, just trying to make a dime or 15 cents in the stock, and then getting out, because we all know sometimes these things fall back to earth, and sometimes they triple in price, and you got to be kind of prepared for either one of those things to happen.
Well, it looks like falling back to earth. That looks like what folks are wagering on with those Intel puts. So speaking of Intel, we got one more here we should get to, since we are talking Intel today. This came across our radar this morning with our Eye of Sauron, and it's not all downside puts in Intel. As you might imagine, there's a lot of paper lighting it up out there, listeners. And if you dig down the chain a little bit, probably number 5 or 6 on that list, because there's a lot of stuff slinging fast and furious out there. You'd see this trade that came across our radar. First noticed 10,005 of the AUK35s going up for $1.34, pretty much $1.35. So through the offer on splits, obviously, they really wanted to get it done 10,005 times. The stock was $32, so that should be your first indication. They were feeling the animal spirits. They obviously put this on when the stock was a wee bit higher than it is right now. It's 30 2/3 right now. So that's your first sign that maybe they were feeling a little bit of the animal spirits. And then we saw 6,000 more, 6,134 to be precise, going up. Looks like about 30 minutes later or so for $1.56. So these things have been trading up a storm all day. I just checked, the total of 52,000 of these have traded out there today, listeners. So AUK35s, definitely one of the sweet spots out there in Intel today. So I'm curious for you folks. You think about $1.33 to $1.50. Would you be a buyer? Would you be a seller? Sold to you right now, $30.50. $35 seems like maybe a bit of a distant memory, but this name can move quite a bit as it's proven recently. So a kind of interesting paper. I'm curious, Mr. Flowmaster, did you notice this explosion of AUK35s out there in Intel today? And what are your thoughts?
I did see it, and I see even more. I see another 6,000 trading like all the way up to like 160 a little bit later. Possibly somebody that got a little too excited. I doubt that it was somebody that was short Intel trying to kind of panic cover. We're into a different kind of world, right? With the government taking stakes in American companies, and then some of the posturing happening, and I think maybe people are really like kind of starting to contemplate, okay, what if we do see some real major kind of shifts in the way that the big businesses work, right? And everybody's talking about NVIDIA's, market cap over $3 trillion, right? And so, for them to throw some money into Intel, which we already own 10% of as a country, as you mentioned, it's just weird. But at the same time, it's a lot of the things that are going on are kind of weird to the upside, right? It makes, I think some things make people uncomfortable, like, it kind of makes me uncomfortable at the kind of, the basic level of, capitalism and government. But if things are going to happen, you could see some real moves, and that is what we see in Intel today. It'll be interesting to kind of see, what the aftermath looks like.
Well, the aftermath is always wild on a Thursday, listeners, as we dive right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, let's run through some of our recent and current questions of the week right now. Last week, we asked you about the Feb 60s on the show. They were trading for 60 cents, 30,000 times in VIX. Are you a buyer, sold to you, or seller as part of a vertical or spread? And 43.8% said sold to you. 37.5% said you want to buy them. 18.8% said you wanted to sell them, but only as part of a vertical or spread. Listeners, let's get out to some of our other questions of the week from last week. We asked you about OCK 15 puts last week as well. 40,000 of those going up in VIX for 19 cents. You folks could not make up your mind. Exactly 50% of you wanted to buy them. Exactly 50% of you wanted to sell them. I think that's a bit of a glitch on Twitter more than what you folks had on the brain, but we're seeing more and more of those 50-50 splits lately, which is we've never seen before. So I think something is gumming up the works on the Twitter poll side, but nonetheless, you folks pretty close to even on that one. We also had a little fun with the kickoff of our fantasy football league, which I'm pleased to say I am now in the standings for first now after 2 straight victories, looking to score our third, even though my running back now on IR, so I got some work to do on the waiver wires. But that said, we asked you last week, who are you buying a call option on, not to win the Super Bowl, just to get to the Super Bowl? Chiefs, Bills, Eagles, or Ravens, and the Bills took it 37%. A tie for second, 26% each for the Chiefs and the Ravens. And then the Eagles, the actual champs from last year, coming in fourth, or actually technically third, with 11% only, which gets us out to our questions that are live right now on Twitter, listeners. We put a couple live during the show. First off, we asked you, those Intel puts, those are kind of wild. Expiring tomorrow, 90,000 times the 30 puts for 40 cents. Are you a buyer or sold to you? Straight up lottery tickets. And again, right now, 50-50 exactly. This just went live a few minutes ago, so I have a little bit more patience for this one. But 50-50, our audience can't make up your mind whether you want to buy them or sold to you on those puts. We also have a question right now going back to those DEES 14 puts, trading 80,000 times this morning. They were part of a 1x2, but we asked you, hey, just straight up for 11 cents. Are you down for those? Are you more of a seller, or you want to do them maybe as part of a spread? Right now, 71.4% of you want to buy those puts straight up. 14.3% each, roughly, want to sell them or sell them as part of a spread. Nobody wants to buy them in a spread. So you don't want to sell puts and then buy these, which is, I think, actually what's going on with those puts. So kind of interesting stuff. Speaking of interesting stuff, let's get out to our actual question of the week. This one has been kind of fascinating to watch the evolution of it. As you'll recall, it went live during Monday's option block, Uncle Mike. And as we put it out there, we said effectively, and this is the question, surprisingly, we should ask more often, because there are so many newcomers coming to the network. We see it all the time. So many new players entering the options market. Look at, the Robinhood Summit that the Flow Masters went to a few weeks ago. A lot of new players coming in there as well. So a lot of new players entering the options game. So we thought, quite simply, we'd ask you, how long have you been trading options? A question which we have never asked, or really not asked in a very long time, which we probably should ask more frequently. So very simple one this week, but also informative. We asked you again on Monday 4 choices: less than a year, 1 to 3 years, 3 to 5 years, or north of 5 years. You'll recall on the Monday show, right after this poll went live, it was somewhere around 25% for less than a year. That was kind of wild to me. I know we have a lot of newcomers. I didn't think there were that many in the audience. But fast forward to Thursday, and those numbers have changed a little bit. Mr. Uncle Mike, if you had to hazard a guess, sir, where is the majority of our audience fallen? Again, this is not just for the option block. This is our full network audience. Is it less than a year, 1 to 3 years, 3 to 5 years, or north of 5 years, sir?
I will go for the whole network, 3 to 5 years.
Okay, interesting. Mr. Flowmaster, do you agree? Do you disagree? And or why, sir?
I would say 3 to 5 years as well. I mean, there's been, some great kind of momentum and improvements in education and improvements in access. And, COVID was kind of the beginning of this whole new wave. But I'd say I'm going to change my guess, actually. I'm going to say 1 to 3. But it is a very exciting time for the industry.
It is a very exciting time. And after that early surge of less than 1 year, I think the hardcores in our audience, they got angry. They got motivated because they've come out in force ever since. I know we have a very hardcore, bleeding edge, sophisticated and experienced core in our audience. And they are represented hard here. North of 5 years, 64.6%. So we got some experienced hands at the tiller out there in the audience, which I like to see. Pretty about tie, actually, between 3 and 5 years and 1 to 3 years, both close to 17%. Only a little over 2% now for 1 year or less. So all those people voted in the first blush back on the Monday show, and then none of them have come in since. So it's been all north of 5 years all the time. So get out there at options and make your voice heard.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, around the block time. And how are we hanging out now? Not that dissimilar from where we were at the start of the show. S&P up about 0.6%. Dow up about 0.4%. NASDAQ up a little over 1%. And the VIX cash hanging out right around 15.5 to 15.60. So pretty much the spitting image of what we were at the start of the show. That said, Mr. Uncle Mike, we'll start with you, sir. What are you keeping an eye on until the Monday episode of the old OB?
I mean, I'm keeping an eye on precious metals to see if they can make another run over the weekend. Also keeping an eye on bonds, as well as any presidential social media, to say the least. Continuing to watch those things.
Uncle Mike, you have to listen to our futures rundown show from yesterday. Our guest was postulating that the Fed may have put the dagger in the heart of all things precious for a little while. I'd be curious to get your take on that, sir, as a diehard precious fellow. Speaking of getting takes, I was remiss in our mail block, Mr. Flowmaster. I had a listener question from yesterday that I wanted to give you a chance to weigh in on. I got too excited with our polls, so I will give you a chance to weigh in now if you like. But the question came in our Options Bootcamp show yesterday. Someone was asking us, quite simply, if these numbers we're seeing out of OCC right now, 1.25 billion contracts in August, just absolutely explosive volume numbers, if there's maybe some flimflammery, perhaps, because he was saying there's a lot of stuff going up, like the flex conversions we've been talking about, Mr. Flowmaster, European to American. That isn't really a lot of economic action out there. So he was wondering, if you take all that out, how much growth is there still? And those are obviously big numbers. There's a lot of these big, obviously defined income ETFs that are doing a lot of those conversions in flex. So I thought that was an interesting question. I thought, that's a good question for the Flowmaster. Do you have any thoughts off the top of your head, sir?
Well, it's great that somebody thought to ask the question, because there is volume that doesn't count. And when you go off the OCC numbers, not only are they including flex, but they're also including orders that are routed from one exchange to another just to get the best price. Now, we do keep an eye on that, because I don't really consider that regular volume. The flex volume I do consider, but you're right, it's big. It can be, like I said, Intel was, I think yesterday, 50,000 of a RevCon, so it's 100,000 contracts. You just have to know what it is. I mean, the flex volume adds up to about 1.5 million contracts a day. So that's only going to take, 30 million or so off of that 1.1 billion. And the routed volume doesn't add up to too much. It's a few 100,000 contracts a day, but we do watch it. I kind of specialize in trying to make sure that, understand all the data, and it is just incredibly active. I mean, it's real. It really is real. That Robinhood event, there were over 1,000 traders there out of their 20 million accounts, or actually I believe they have 26 million accounts. And the 606 data, which is a way that we can kind of keep track of how much these brokers are actually executing, it shows that a broker like Robinhood is trading over 6.5 million contracts a day. and that is as real as you can get. And they're basically tied kind of neck and neck with Schwab in terms of the daily volume. So it's real. I mean, it's retail customers, it's institutional customers continuing to trade. It's a lot of the defined outcome, buffer protect style ETFs. I saw one estimate that said that the ETF industry that's trading options as part of the ETFs could be pushing close to 2 million contracts a day through the market as well. So that's a lot of activity.
It's a lot of flow, sir. So interesting numbers. 1.5 million contracts a day on Flex. I was kind of guessing somewhere in that ballpark, but good to hear the actual number from the Flow Master's mouth. And Mr. Flow Master, what are you keeping an eye on until your next appearance next week?
I think Mike said it best. It's really, there's no earnings coming up for a while. So it's macro, it's, unexpected moves. Valuations are high. I think everybody knows that. And we're kind of in a cycle right now where, it's the views all seem to be pretty optimistic. I think I saw some headline this morning saying a JP Morgan analyst had some case for equities having 40% upside from here. And now we're up 30-something% from the bottom of April, right? After Liberation Day. So I would be cautious about pouring money into the market, but you can see we just keep lifting and lifting and lifting. And the truth is most of what's being done kind of at the government level is pro-business currently. Remember, we had a little, that when Trump was elected, there was a rally because everybody felt like this was going to be a great business environment, and then everybody got scared. And now we're kind of back to the view being that, this is a great time for business. I just think, you have to be a little careful, especially, we're up 12%, on the year. So, a 4 or 5% pullback could happen, and, we'd still be up 7 or 8% year to date. So it wouldn't blow up people's performance, but people can get themselves in trouble if you really, very extended or levered up into a market that's up pretty strongly. A pullback of 2 or 3 or 4% in a week really could kind of be very painful for some traders. So I think it's important to keep your positions small and stay disciplined.
All right, stay disciplined indeed. But that music means we are out of time here on the old OB for this week. If you need more in your lives, if you're hanging out in the pro, just hang out. We'll be back in a little bit with our good buddy, Miss Carly Garner, to hold court on all things futures options. What's lighting it up? Is it Uncle Mike's beloved silver? Is it nat gas? Is it equities? Is it ags? Is it rates? Who knows? Crypto, FX. You never know. You got to tune in to the show to find out. But before we go, let's go around the horn. Uncle Mike, sir, where should folks go if they want to discuss the endless peril that is the dark hinterlands of St. Charles, sir?
stcharleswealth.com. Book an appointment to talk with me. Always love to talk to any of our listeners. And you can follow me on Twitter at Mike Tosaw.
There you go. At Mike Tosaw, the place to go to kick the tires and light the fires. And Mr. Flowmaster, where should they go if they want more Cboe goodness? And maybe if they want to see your own musings on Twitter, sir?
They can head over to Cboe.com. Cboe.com/RMA is our data platforms. And on Twitter, we are Option Alert, and occasionally I get some personal commentary out there. Take a visit. And if you're not already using or trying out Trade Alert, you really should. Request a trial. It's free, and you can see some things you're not going to see otherwise.
You should go grab Flowmaster on Twitter, sir. I'm sure someone has it right now. It's probably some urinary tract device account or something like that. But hey, offer him $1. See if they'll take it, and you too can be the official Flowmaster. In the meantime, listeners, you know where to go. Cboe.com/RMA is the place to go to begin your journey to the dark side. Of course, a lot of cool things popping off in the land of Cboe lately, including some new products coming to the fore. So a lot of stuff to check out. Cboe.com is the place to go to learn all about that. We got to get on out of here. Back again in a little bit. Like I said, with our friends from CME, and Miss Carly Garner to talk futures options, back after the closing bell to unleash the son of Odin, a.k.a. Thor, a.k.a. the Hot Options Report, upon all of you out there. and it should be a fun time. Then back again tomorrow to talk vol. Who's going to join us on the show? Well, you got to tune in to find out. Then we're back again one final time for our pro friends, theoptionsinsider.com/pro, to talk weird and wild paper on options oddities. Then we're wrapping it all up for the week one final time with the last hot options report for the week. And we're back again on Monday. Uncle Mike and the Rock Lobster going head-to-head in some 80s trivia on the next episode of the Option Block. See you then, and of course, stay safe out there.
The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.